Hey guys, and welcome to Sunday Markets Outlook. We're going to jump right into it by looking at the dollar index. And just before we continue, I want to just put this on record. I'm sure most of you know it already, but when we talk about the dollar index, we're talking about all the major pairs going against the dollar. And so all of these pairs, the pairs such as the euro dollar, the Canadian dollar, the pound dollar, you got your Australian dollar. You have all of these major pairs, the Swiss franc, all of these pairs being paired against the dollar itself. And so what the dollar index is a basket of all the major pairs at different ratios, and ultimately they're all being paired against the dollar. Now, the pair that makes up the most of the dollar index is the euro dollar, and so what you're going to find is that when the dollar index is getting stronger, then the euro dollar will be getting weaker. And when the euro dollar is getting weaker, the dollar index is going to be getting stronger. So ultimately, they are inversely correlated. And so I just wanted to kind of put that on the table so that you guys are mindful. Why are we looking at the dollar index particularly? And the first thing that I want to highlight is the fact that the dollar index has been using this key resistance level for some time now, giving us multiple buyers exhaustion. And not only that, we have a very interesting candle formation over here in the form of this shooting star. Now, this implies that we could see a very good week in terms of dollar weakness ahead. And bear in mind, this is on the monthly time frame. Not only that, we do have bearish divergence, and that is also a very strong seller's signal. So there's a relatively good amount of confirmation to suggest that the value of the dollar is looking to decrease in the coming week. So if we go over onto the weekly time frame, what we can see is that currently we are using this moving average over here as a dynamic level of support, which is not surprising because what I suspect is that we could see a short-term blip to the upside, only to have the market eventually running further to the downside. And I'll be able to explain that in greater detail when on the daily time frame. So what I argue is that we could see the dollar index potentially wanting to run all the way up to this point over here, uh, around this support zone, to get more sellers into the market and then ultimately push the value further down. And this is the level that I'm looking at the dollar to drop towards, which is 97. So this is the dollar index, and this is what our bias is as it relates to the dollar index. And obviously, all this will change if we start to break above this level over here and start to make higher highs. But the chances of that happening, I don't really favor it. I don't put it very high because the market has already kind of shown its hand when it broke this key level of support over here, especially this support zone. So the next level that we could potentially see the dollar run towards is 97. So with that being said, guys, let's go over to our next pair. Okay, guys, so our next pair is going to be the Australian dollar, US dollar. Now, notice the first thing that kind of catches my eye is the fact that we have this nice bullish engulfing pattern over here. And why that is so significant is because if we were to go ahead and highlight a support zone, um, what we can see is that this bullish engulfing pattern over here appears on a monthly support. So this is actually a monthly reversal signal, implying that the market does in fact have the capacity to break this level of resistance, ultimately running all the way to potentially testing this key level of resistance over here at 7,000. Alternatively, if we break that, we are running all the way to this moving average over here. But I want to go ahead and refine this a bit more because there are a few things that I need to be mindful of and I want to bring to your attention as well. And the first thing is the fact that the market has built a lot of momentum, but it's running straight into this moving average over here. Now, bear in mind that this moving average over here is lining very nicely up with this key resistance level of 66.75. And if we break the key level of resistance alongside the moving average over here, that's acting as dynamic resistance, then ultimately there's nothing that's keeping the market from running all the way up till this point. However, we do have the market showing us severe signs of exhaustion. Now, when I talk about exhaustion, I mean that since the 26th of May, price has not been able to break above this resistance level. And also, if we look at how the price has gotten to this level, it's gotten to this level in the form of a rising wedge. And we also have this upward sloping trend line that is, although guiding price is currently being squeezed as we are not able to see the market actually break above this level over here. So what I argue is that we could see a potential drop in value to then build enough momentum to break this key resistance level. Alternatively, if the market does have it in itself to form a very strong engulfing pattern over here in the form of a bullish engulfing pattern, then that would uh, have a very strong impact in the next few candles running all the way to this key resistance level over here. So as it stands, I wouldn't be opposed to the fact that we could have a temporary pullback to eventually build enough momentum to break it. But I'm also not opposed to the idea of the market actually running very, very strongly through this level because it has happened before. Now, guys, bear in mind that this is just my opinion, but my bias on the Australian dollar, US dollar particularly, is actually bullish. So, with that being said, let's go over and jump over to our next pair. Okay, so our next pair that we're going to be looking at is the Euro dollar, US dollar. Now, the first thing that I want to draw your guys' attention to is the fact that we are coming off a monthly support zone. And not only are we coming off a monthly support zone, we have a lot of seller's exhaustion over here as well, which is a very strong reversal signal. And bear in mind that this is on the monthly time frame. Going over into our weekly time frame, what we can see is last week closed a very nice bullish engulfing candle. And with this bullish engulfing candle, I wouldn't be surprised to see this as a catalyst to kind of pushing the value further and further up. Now, I didn't show you guys, but we do have divergence on the monthly time frame, which is also a very strong signal for the market to actually move further to the upside. So if we jump straight over onto the daily time frame, what I would look at is although we have a very nice daily shooting star, I wouldn't necessarily look at this as an opportunity to sell the euro dollar. But in fact, I would look at this as an opportunity to use this signal to see the market drop to either our 38.2 fib retracement, alternatively our 50% fib retracement. Now, my personal bias would see the market actually drop all the way to 50. And the reason being is because we have this moving average over here, we have the 50% retracement, and we have the key support level of 1.1. These are all strong factors that suggest that if the price was to in fact get to this point over here, we would have quite a nice opportunity to run the market all the way to the current double top pattern over here, the current resistance. And if it breaks, we can run it all the way to the monthly pivot. Now, if we were to look at how much return that could be, and just putting in our stop losses over here. So let's say we have a 55 pip stop, just for the sake of for the example, our first target could ultimately be all the way up over here, which would be a 2.42% return. And if we were to run it all the way up to the monthly pivot, that is a 3.78% return. Beautiful, beautiful run. And no matter how you look at it, your stop loss is protected by the 61.8% fib retracement as well as this moving average over here. And bear in mind that if we see the market drop and start to build momentum up again, we have our EMAs coming in and acting as protection dynamic levels of support, protecting and guiding price all the way to our target level. So I would see that the euro dollar does have massive amounts of potential to kind of take advantage of. And I think that this is definitely going to be a pair that I'm going to be keeping on my watch list for the week to come. So with that being said, guys, let's jump over to our next pair. Okay, guys, so jumping over onto our next pair, which is going to be the pound dollar. Now, this pair has a bit of conflict, I'd say, but it does have massive amounts of potential if you can look through it. So it's just a case of waiting to see what the market's hand looks like before we actually make a move. And I'm going to explain why I say that in just a moment. So the first thing that I have to draw to your attention is the fact that with all of the major pairs, we're coming off significant levels of either resistance or support. This is no exception with the price actually, with the market actually coming off the key monthly support zone. And we have a very unique candlestick formation set up over here in the form of this tweezer bottoms, which also implies that we have the capacity to see the market running further up. Not only that, we also have bullish divergence. And all of this supports the fact that we could see the price running further to the upside. Now, what we can also look at if we go over onto our weekly time frame is the following aspects. Now, notice on our weekly, we have this morning star formation. But if we go over into our daily time frame, things becomes a little bit more complex because now I know that the screen looks a bit messy. So what I'm going to do is I'm just going to remove the fib just to give you guys a bit of context with regards to why I removed it and why I drew it in there in the first place. Now, although we're on the support zone, and the price is running up. Notice that the way the price is running up is it's running up in the form of this rising wedge pattern over here, which is ultimately a reversal signal. Not only that, we also have this shooting star on a daily time frame, and not only that, it is also the fact that it's the third touch on the corrective pattern, which also suggests that there's the potential of the market wanting to run further down. Now, the reason for that is because if we take and measure from the beginning of the trend all the way to the end of it, we can see that this is actually a 50% fib rejection. And this is a beautiful setup. I mean, if I look at it, this market could offer you a very nice short opportunity. But the problem that I have with this is that all of this information is collected on the daily time frame. And so this conflicts with the fact that the market on the monthly time frame suggests that we could actually see the market running further to the upside. So unlike the euro, which really gives us very, very clear and precise opportunities, the pound actually gives us a buy and a sell opportunity. And this is something that I usually stay out of because I need the market to tell me, is it going to be a buy or is it going to be a sell? At the moment, you're giving me both buy signals as well as sell signals. And when you get such a pair, that doesn't really give you clear direction. It's best to wait and see how the market would ultimately respond to the current structure. And once it kind of runs into a particular direction, that's when you can confirm the market is actually preparing itself to go further up. In other words, that if the market was to run further up, that would suggest that all of these, the 50% fib retracement, the shooting star, the rising wedge pattern, all of these sell signals is null and void, and the market is definitely looking to run to the upside. However, if the market does look to come further down, then you can look at this as confirmation of direction. Personally, I'm not even interested in looking at the pound as it stands, but I will definitely keep an eye on it during the course of the week, as I believe that this could potentially continue still developing. But that's the pound dollar. Let's go over to our next pair. Okay, so our next pair is going to be the US dollar Canadian dollar. Now, this specific pair has reached a peak high over here of 46.75, pulled back, and now what we have is this is the third month that we were not able to break above this resistance zone of 41, 1.41. And we have a relatively good looking shooting star. We have multiple rejections, and I would see the market running all the way down to 1.34. Now, if I take all of that factors and push it into our weekly, what we can see is that we had a significant break, in fact, of our support zone, our support level of 1.88. And with that break confirming direction, if I go over into my daily time frame, we have actually run into this dynamic level of support. Okay. Not only that, we have deceleration. So what I suspect is the market could want to do the following: use this as the trend, pull back all the way to this level over here, which will not be unusual considering the fact that this was previously a level of support, now acting as a level of resistance, lining beautifully up with our 50% fib retracement, and then running all the way to the downside over here, which is at our take profit at 1.34. Alternatively, what we can see the market wanting to do is actually break all of the fib levels and run all the way up over here, lining up with um, our 50 period moving average, as well as these lows over here in line with the zone over here, which is at around 4,000, 1.4. And that could result in us seeing the drop further to the downside. Now, personally, I wouldn't be surprised to see the market running so far up, but I'm still very bearish biased with regards to the US dollar, Canadian dollar. And if I'm looking at my target will definitely be at 34, 1.34. So I will be looking at a temporary pullback, but ultimately just to see the market roll over all the way to the downside. So that's the US dollar, Canadian dollar. Let's go over to our final pair. Okay, guys. So looking at our final pair, the US dollar, Japanese yen. This has been such a choppy pair for the longest time, and I don't even want to go into what's happening on the monthly because there's such a lot of lines, there's such a lot of moving averages, there's such a lot of things happening. So we can kind of refine this a lot better if we go over straight into the weekly. Now, looking at the weekly time frame, I can see that if we focus on where the market currently is, we can see that we're not making any serious strides. But the thing that I do want to bring your attention to is the fact that the market is using this moving average as dynamic level of resistance. Going into the daily, we can refine it even more when we can see that since April of this year, price has not been able to break this resistance zone of 107.924. And with the fact that the market has not been able to break it, I actually scaled all the way down into my intraday timeframes where we saw uh, the price closing with this beautiful shooting star. Now, usually one would argue that this is definitely not the place to trade because we have such a massive bullish engulfing candlestick pattern. I mean, look at that thing. But we still haven't broken this key resistance level over here. Not only have we not broken it, I would argue that we could in fact see the market do the following. I would argue that the market would actually it's actually poised for the downside. And I will confirm this when I see the market actually breaking this 107.7 level of current support, retesting it as resistance, and then seeing the market run all the way down to our 10700, which implies that if we were to in fact take this position at that point over there and look at, like, even if we were to put a 50%, even if it's not 50, sorry, a 35% stop loss, we would be well within our means of having this particular position protected and running it all the way down till here. That's almost a 2% return. If we were to kind of make our stop loss a bit smaller, then you got your 2% return. But ultimately, what I'm saying is that this is one of those types of pairs that if it's set up and it works out, it's a very low risk trade and it is a very, very, very high probability setup. And the reason being is because these moving averages are all over the place. They're all over the place. And so if you're looking at your horizontal support and resistance and looking at the overall fact that the market has been kind of moving sideways within this zone over here, it's not surprising to me to see a move like this and a shooting star that forms on key resistance. And so all I'm looking for is a nice break of the 107.7%, sorry, the 107.7 support level over here in this instance, break it, retest it as resistance, and then see the price running all the way down to 107.100. It's a very nice run to the downside, and I would say that this could be one of those positions that is very easy to get into with very, very little risk. So that is my bias with regards to the US dollar Japanese yen. And so, guys, like I said, this is just my opinion. I'm not saying that this is guaranteed going to happen. There are a few of the pairs that we looked at last week, which is the same pairs, but the market had done a few things that we have, in fact, anticipated, and there's a few things that the market hasn't done. But what I'm trying to do is just give you guys an idea of what could potentially happen. And so, if you have any suggestions, if you have any add-ons that you would like to share, please feel free to share it in the comments. And also, if you guys have any pairs that you would like my opinion on, please feel free to send it to me. I'll be more than happy to have a look at it. And like I said, all I can do is give you my opinion. But for the most part, guys, I hope that you have an awesome Sunday. I hope that you have a brilliant week. And I hope that you found value in our video today. And so as we move forward into this week, I hope and wish all of you well. I look forward to chatting to you all soon. And so, with that all being said, guys, cheers and bye for now.